Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, looking at the Australian dollar chart on a daily basis, the fact is the market has again retreated from that 71 handle and above 71.20, which is the 60-day moving average. As the bears continue to pound their paws around the 71-cent handle, it is assessed that the market will eventually turn back to the downside and look towards a region of 70.40, with the objective still remaining at 69.40.60. Yesterday was the RBA's minutes of its March meeting, which didn't offer hardly anything, which kept the prices unchanged. In the RBA publication, the central bank reiterated that the board agreed there wasn't a strong case for a move in policy rates in the near term, that is, and there were significant uncertainties on the economic outlook. The other thing to note, though, is the house prices fell at a faster pace in 15 and a half years, led by Sydney, Melbourne. The Australian Bureau of Statistics reported yesterday. House prices across the nation capitals fell by 2.4% in December quarter to down by 5.1%, though through that is to 2018. This was a steeper decline than any time since the ABS began recording records around 2004, including during the global financial crisis when prices dropped around 4.6 annually in March quarter of around 2009, that is. Elsewhere, reports from Trump administration officials saying that there again is concerns that China is pushing back against US demands. So let's see if this does keep a softer tone on the Australian dollar. If we do see some rejection from the Trump administration and China, is that the Aussie will come under significant pressure. As I say, the technical implications from the RSI is breaking down and the MACD is also nearly marrying up to the situation of a bear case. Well, as you can see, the euro is once again tackling this level of 113.55. It is assessed that the market may actually push through that level, but this will give us opportunity to shorten the market, as I believe we are still looking around this level up to 114.5 as a potential sell zone. I'm not saying that the market will get around 114.45.65, but to your risk management, you should keep that in mind. Later, the Fed wraps up its two-day monetary policy meeting and announces tomorrow morning at 5 o'clock its rate decision. It is widely expected that they will keep rates on hold. However, the release of the statement may be scrutinized for clues of what the central bank's actually looking for in terms of its economic outlook. Back in January, the Fed did signal that it would be patient as it considered more rate hikes amid concerns over slow global growth. But my view is that the market may see a slight impulse to the upside due to the fact that the weaker US dollar. It posted a 2% decline overnight to 95.71. The base still holds at 95.40.60. Support at this stage for the euro is at 112.85. Well, the dollar yen case did get to a low of 111.15 overnight before rebounding slightly. We're still locked in this range of 111 to about 111.80, but overall, from a technical point, the RSI is trying to recover, but the MACD is still quite content in keeping the bear phase outlook into today's session. So any rally should fail, and I do expect to see the market eventually turn back towards the downside, with the objective still remaining around 110.20 to 75. Well, the pound didn't make any significant moves overnight. As you can see, still coasting just beneath the level around 133.5. I still feel this level was vulnerable and therefore could see impulses up towards the upside. It was only yesterday that the Speaker of the House of Commons, John Bercow, he knocked back Theresa May's vote after saying that it was unchanged from the previous and rejected it twice by a huge margin. With Brexit uncertainty still continuing and only 10 days to go now to the divorce, which is on the 29th of March, the market will start getting a little bit jittery. So just be careful if you're trading. For myself, my strategy is to sell above 133.5 and look towards 134.5 to 135, as I feel we could get there before a significant downturn back to the region of 129.50, 80. Gold broke over the level of 06 yesterday. I went straight for the resistance, as you can see here, of 1,310.12, but held. From a technical point, we are still bullish, and I still expect to see further upside tests, and a break above 12 would lead on towards 16 to 24. Any dips should find support now around 99. And rounding up with oil, the market's taken a bit of a breather overnight, although we did see a brief high of 59.80 before pulling back slightly. Overall, though, I am bullish, and I do expect to see further tests to the upside, with the objective holding $61 a barrel, and any pullback to find support minor at 58.45 and a base at $57.10.15. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy a great start to the new day.